The Australian Financial Review.
Hello, I'm James Thomson, Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. And with me today, as always, is the senior Chanticleer columnist at the AFR, Tony Boyd. Tony, how are you?
Great, James, yes, and nice to get halfway through the profit reporting season.
Absolutely. This week we're going to look at what the bank's profit numbers say about the housing market. We're going to ask how long RBA Governor Philip Lowe might have left, and we'll tell you which companies to watch next week. But first, Tony, as you mentioned, we're halfway through. It's been a huge week of profits. And I think between us we've spoken to about 14 chief executives across the course of the week, which is always great fun to check in with the various leaders of Australia's big businesses and see how they're feeling. Tony, what do you reckon is the most interesting thing a CEO told you this week?
Well, the most interesting thing came from Rob Scott, the CEO of Wesfarmers, because he told me that his shareholders are going to give up hundreds of millions of dollars in earnings from the Mount Holland lithium project in WA because of delays in environmental approvals. Just by way of context, Wesfarmers and the Chilean company SQM, they're spending about $2.6 billion developing a project that aims to deliver about 50,000 tonnes a year of battery-grade lithium hydroxide. And what Rob told me is that he expected the environmental approvals to take 12 to 18 months. But now, because of backlogs in the state and federal bureaucracies, he says it'll now take 2 to 2.5 years. So he's basically saying that they're going to lose a year's worth of production for critical minerals and the processing of that in Australia because of problems. They're not because Wesfarmers won't agree to the environmental standards, which are quite high. It's just that nobody's able to get this through the system quick enough, which sounds to me to be crazy.
Yeah, we're in the middle of an energy transition. That is, I can understand Rob Scott's frustration there. The little tidbit I picked up was from Tim Ford, who's the CEO of Treasury Wine Estates, who they own Penfolds amongst lots of other brands. He said an interesting thing about how people are buying wine in this environment, and I expected him to say, people are trading down from the very expensive drops of Plonk to a cheaper thing. But what he's saying is that everything above $30 a bottle, which is called luxury basically in the wine game, that's growing strongly in basically every jurisdiction. Australia, the US, Asia. It's pretty flat in Europe, but still doing well. Everything under $12 a bottle, which is called commercial wine in the trade, that's struggling. And so people are choosing, instead of to trade down and drink cheaper drops, they're choosing to give up the cheaper drops completely, drink less often, and buy a better quality bottle of wine when they do so. I spoke to a banker yesterday and he said they're seeing a similar thing in their card data. The people on high-end cards, often associated with travel loyalty programs, they're still spending. The people at lower socioeconomic levels on the cheaper cards, they've stopped spending. So there's this two-tiered economy out there, I guess, Tony.
Yeah, no, well, it's incredible that Rob Scott also released record profits for Bunnings, Officeworks and Kmart. And he said that it's consumers hit by cost of living pressures who are seeking value that is driving the volumes through those businesses. And a good example, a T-shirt at Kmart costs $2.50. When I asked someone in the office, how can I look trendy, I'm probably going to shift into a T-shirt as I'm retiring.
Yes.
And they said Mark Zuckerberg wears the Brunello Cucinelli T-shirt,
yes,
which you can buy in Australia for $438 each.
Oh, right.
I'm actually not tempted. I might go to Kmart.
Yeah, you reckon you're more of a $2.50 T-shirt man, Tony?
Yeah, as long as it's 100% cotton.
Do you know what your mates in the Bitcoin mining industry? What price T-shirt do they get around in these days?
Well, look, I think it's more what's on the T-shirt, and it's an arrow going up. Okay, I lost a lot of money on Bitcoin miners, but one of them, Iris Energy, I think in the last week has gone up 40, 50%.
Yeah, they're jumping off the canvas.
Because Bitcoin's come back. I don't know whether this is going to stay, but as Charlie Munger said, it's all rubbish. It's all just crap.
And now it's crap up 50%. So there you go.
People are buying it.
That's right. Well, let's get serious again. Well, I want to check in on a specific result this week, and that was from the market operator ASX Limited. And Tony, you've really read the reporting on the disastrous project that they went through to replace the CHESS clearing and settlement system, which is really the backbone of our local financial markets. They're trying to get up a new system, and there's some important developments here this week. Tony, tell us a bit about what they're doing.
Well, with their profit results, the CEO, Helen Lofthouse, said that they would pay market participants about $70 million. And as you said in your column, this is a big mea culpa for the failed CHESS project. There's basically about $15 million will be paid to clearing and settlement participants as incentive payments, and they'll get another $55 million upon completion of the new solution, whatever it is. But the thing that stuck out to me was that the new solution won't be known until December 2023. So it's probably not going to be in place till 2026. And that's why I understand the regulators, ASIC and the RBA, are seeking assurances from ASX to make sure that the current system will last at least until 2028. So This is amazing how long it's taking.
Yeah, and there's some interesting details about that existing system. It's run on this computer language called COBOL, which is but somewhere between 40 and 50 years old. And so the programmers who can work on COBOL, well, they're a bunch of older people who need to be sort of carefully sourced around the world. When I sort of talked to Helen Lofthouse, the ASX CEO, about this yesterday, she said, "Yeah, okay, it's an old language. There's not many applications written on it, but the big banks still use COBOL a lot. So there is still some capability, but they're going to be running this creaky old system for some time, aren't they?"
Look, I really think they're going to have to upgrade it, James. The volumes through the market are going to grow, and that they're going to actually also spend money on that, as well as building this new system, which they cannot buy off the shelf. They have to have some bespoke system. No,
they've reviewed 20 vendors around the world, and I think that is the big conclusion, that there's no simple solution here for the ASX. This is a complex, massive project still. It's, as you say, it's years away from completion. Whether that's 3 or 5 or something longer, it's really hard to know at this stage. All right, Tony, well, let's turn to unquestionably the biggest profit of the week, and that was from the Commonwealth Bank, which reported a $5.1 billion cash profit, up 9% to a record level for the December half. And look, this was a powerhouse result from a powerhouse bank. And what's interesting here is that despite the CBA's size, it's still ripping out pretty good growth numbers. It added a record 700,000 transaction accounts in the 6 months ended December, which is pretty stunning. Chief Executive Matt Comyn did point to a few potential icebergs ahead, Tony. He was really trying to talk the state of the economy and the outlook for the bank down a little bit.
Yeah, he was. And, of course, there was a very interesting chart that he published which showed that their net interest margin peaked in October last year. And so the outlook for the bank is not as bright as people had previously thought. And that's why the stock over the week fell about 9%, which is quite a lot for an organisation of that size. So, yeah, I mean, I think you wrote the first comment on it. What stood out to you from what Matt Comyn told you in conversation?
Yeah, well, I think the margin, the pressure on the margins is what the analysts and investors are going to be worried about. Rising interest rates, they help lift bank profit margins because the banks increase their the interest rate they charge borrowers faster than they increase the interest rate that they offer to depositors. So there's a gap there that helps their profits go up. But the market had been hoping that gap was going to get bigger and that net interest margins would improve over the course of 2023. What Comyn is basically saying is, hang on, this isn't these margins aren't growing as fast as you think. And the big reason for that is incredible competition in the home loan market. These banks are going at each other like crazy, Tony. And Matt Common suggested, there's some banks out there that are writing loss-making loans, which is pretty irrational behaviour.
It is. I think it's going to force people to look far more closely at those statistics that are published each month by APRA about who has been growing above system. And the fingers will be sort of pointed, I think, in the direction of ANZ Bank. I think they've been quite aggressive. I think NAB has got some big, I think a $6,000 cash back through UBank for people taking out a home loan there. So, yeah, obviously Matt Common never mentions the name of any competitor in any of his presentations.
Indeed.
All he does is have those charts showing his peers with much smaller market share in everything except business banking, which NAB still dominates, but they're going after them too, aren't they?
Yeah, that's right. What did you make of how CBA feels about the housing market? Obviously, there's a lot of focus on how people are doing in the housing market. They seem pretty sanguine about where things are, with the caveat that as rates continue to rise, it's going to get tougher for people. Yeah,
well, I asked Matt Common how much of your loan book is fixed rate that'll go to floating, and he said that this year it'll be $96 billion worth of mortgages. That's about $12 billion in Bankwest and the remainder in CBA. And he said he wasn't worried. He said the creditworthiness of those customers is very good. And the bank at the moment has record low levels of arrears. So, I think there is going to be pressure as rates go up, but he seems to be sort of playing that down. Did you get the same impression?
I think that's right. And when you look at what they're saying about that, there's a group of customers that they're worried about, and this is a group of customers that have high loan to value ratios. So their loan accounts for 90% of the value of their property. So, they've gone deep in debt, right? So these guys are only about 0.2% of the entire CBA mortgage book, and that's a $480 billion mortgage book. So, these guys have loans. This troublesome cohort has about $1 billion worth of loans, a bit more than that. So that's a pretty small group of people that we're really concerned about. And you don't want anyone to feel mortgage pain. There's nothing worse than, seeing those, seeing the impacts on a family of that. But in terms of the broader economy, the problem seems fairly well contained to me, Tony.
Yes, and do you see a problem with bad loans in the year ahead in terms of the entire financial system having higher arrears and defaults? Or
I don't think so. I think banks like CBA and really all banks are so well capitalised that they're holding such big provisions against any bad debts that we shouldn't see a massive issue with this. Again, there's a pocket with Nyla Sweeney from our property team. She reported that there are around 120,000 homeowners who bought during the tail end of the pandemic boom on low deposit loans who are probably fallen into negative equity. Not a good position for them to be in. But again, it's a pretty small tail. What about you, Tony? Are you expecting a sort of sector-wide problem here?
No, I don't think so, James. I think Australia has some of the lowest mortgage default rates in the world, and there's, people say, oh, well, it's a horrible expression, but sell my grandmother before I'd default my mortgage.
Yeah.
I think this is the single biggest transaction that they have in their lives, and they do everything they can to hold on to it. And banks are very willing to extend the term of the repayment from 25 years to 35 years. But of course, the borrowers have to be aware that they will be paying a lot more money back to the bank than they borrowed. So I think we'll probably get through this without a huge bad debt problem. The last time we saw something of that nature was 1991, and I don't see that being repeated.
This doesn't feel like that, yeah. Well, Tony, the spotlight was on CBA this week, but it was also on the other big banker of Australia. That's Reserve Bank Governor Philip Lowe, who was grilled not once but twice in front of Parliament, on Wednesday in front of Senate estimates, and then on Friday morning in front of a House of Representatives committee. Tony, you pointed out last week that Lowe was not giving his usual year-opening address to the National Press Club, and in fact had said nothing for about 6 weeks. But that was before we learned on Friday afternoon in a story broken by the Financial Review that he'd given a briefing at a lunch at the investment bank Barrenjoey. Was this a bit of a bad look, Tony?
Definitely, James. It was a bad look, and well done to the reporting of Jonathan Shapiro and Joe Aston on that one. By the way, I think the governor has said that Barrenjoey might have been the source of that story, and I'm pretty sure it came actually from the market. But look, obviously they're not revealing their sources. But when you have a lunch with a bunch of economists, traders and others from dealing rooms, the story is bound to get out.
The word gets around.
The previous governor, Glenn Stevens, used to give interviews to newspapers in January to fill that void between the last meeting that had occurred in November and whatever might have changed over that time frame, which is including new inflation numbers. And the current governor's tradition has been to go to the National Press Club and give a speech there, but he decided not to. But one thing we do know is that the governor said that he will not be giving ever again a lunch between an official interest rate rise and the release of a monetary policy statement. So that's a 3 or 4 day period when they won't actually be going out having any more lunches at investment banks.
He'll have to bring his lunch from home on those days, I'm sure. I watched him appear before the Parliamentary Committee on Friday morning, and he described the Barrenjoey lunch as a breach of trust, that he realises he's destroyed trust with the public. I actually don't know if it's that big a deal, but what this says to me, Tony, is that he's painfully aware that every little mistake he makes now is going to be sort of exaggerated and seized upon because he's got those big interest rate calls wrong. You know, he came out and said no rate rises till 2024, and that is just overshadowing everything he does and says. It's magnifying the effect and means that, you know, a relatively little thing like that Barrenjoey lunch, shouldn't have gone. Well, we don't want him to live in a bubble, but he shouldn't have gone to that one. That becomes this big thing. What do you reckon? Like, is he sort of caught in this trap now of his credibility being strained?
Look, I think he's doing his best to try and get out of that. I thought his performance was very good. He was open and honest, and he had some very good answers. And I think his key message was the corrosive aspect of inflation, the danger of not killing it at the source, because if it gets embedded, you're going to be in trouble, and those affected the worst will be the low-income earners. In other words, we've got to, as a country, take the tough medicine now rather than be on this official interest rate medication for months and years.
Yeah.
So I think that key message, I think, did come through this week. And the other one was that consumers, need to shop around. Don't get ripped off by, low deposit rates by leaving a lot of money in a transaction account that doesn't pay interest. I mean, that's what the year-long inquiry by the ACCC will find.
Yes, shop around. And he said the same on mortgage rates. Shop around. You can save 40 basis points, 0.4%. Shop around. I mean, it's pretty simple stuff. Look, I feel I got some sympathy for Lowe. I think he's saying the right things. He's a sensible, smart guy. It's just that the messages aren't landing anymore. And even in the recent hearing on Friday, he said we have to take the fairly painless path to reduce inflation now. And you sort of think, I don't know if it's fairly painless for lots of people out in the community at the moment, Phil. He's got a bit of a tin ear. And it's starting to show. And one thing from Friday morning's hearings I thought was interesting, just back on this topic of housing, he was asked about how many homes are in negative equity. And the percentage now, the RBA estimates, is 0.5%, so half of 1%. So that's tiny. And they said if house prices were to fall another 10% from here, the percentage in negative equity would only get up to 1%. And even if house prices fell another 20% from here, which would be serious carnage, there'd only be 4% of households in negative equity. So that is a good sign of the resilience across the broader economy.
It is, isn't it? Yeah. So let's hope that the economy is not too badly damaged. I thought it was good that he said, "My goal is not to cause a recession."
Yeah.
So I think that was good to have that out there. But what do you think? I mean, his term comes up in September, and the Treasurer, Jim Chalmers, has said that he will announce a decision on that in June. Does that mean that he's getting in early to pave the way to appoint somebody else, or what do you think's going on there?
I can't see there's any chance that his contract is extended. I think Chalmers has sort of lost faith or is certainly not giving him his full and unqualified support, and it feels like Lowe's time will be up in September. What do you reckon, Tony? Any chance he can pull off a Houdini?
I don't think so, because I think Chalmers did sort of box himself into a corner by announcing a review, and if Phil Lowe was to stay there, it would be seen, I think, as a preservation of the status quo. So it's almost like he has to change, irrespective of what that review finds.
Yes, well, it's going to be a tense few months for the Governor, but we'll be back after the break to look at next week's big profit results, and there is plenty of big news on the economy to come. Okay, Tony, well, as we said, we're halfway through the profit results season. The finish line's in sight, but there's plenty more to do. And next week, we've got some big earnings reports coming in. On Tuesday, we'll get BHP and Coles Group, so we'll get a look at how the broader economy is going there. On Wednesday, we've got Woolworths and tech darling WiseTech. On Qantas, there's another plethora of results. I guess one of the biggest will be Qantas, which has sort of been much in the news over the last 12 months. Tony, is there a big profit result that you want to watch for next week?
Yeah, I'm really going to watch Qantas closely, James, because it's a great chance to take the pulse of the aviation industry and this willingness of Australians to spend a lot of money on travel. The company has twice upgraded its profit expectations for the half year. They did that in October, and they did it again in November as more and more people were travelling at airfares that are very high relative to pre-COVID. The guidance is $1.35 billion to $1.45 billion. I suspect it'll come in right at the top of the range. And, for example, as Goldman Sachs pointed out in a report where they actually upgraded the profit for the full year, they said that the cheapest return fare for the Golden Triangle routes, which is Brisbane, Sydney, Melbourne, Sydney, Brisbane, Melbourne, was $248 in the first half of this year. That's up to December 31. So that's 38% higher than pre-COVID. This environment for aviation is, I think it's as good as it gets.
Yeah, good enough to make you want to float an airline like Virgin, Tony.
Well, that's the other reason you want to look closely at this Qantas profit, because we know the bankers were appointed, Goldman Sachs, UBS and Barrenjoey, to be the joint lead managers of that IPO. Now, that tells you that Bain Capital is serious about selling it. The question is what price, and probably, obviously, after they get some audited accounts for June 30.
Big one to watch. The one I'm going to be watching is BHP. I think one of the narratives of this year is about China's reopening and what that means for the global economy. So we should get a good line of sight through BHP's outlook statement about what they're expecting to see about annual steel production in China. It was about 1 billion tonnes last year. Is there any opportunity that increases as the year goes on and China starts putting the foot down on property sector and infrastructure sector? So I think BHP is a big one to watch to give us a window into China. And Coles and Woolies, I mean, we want to see how the consumer is holding up. Are they still favouring frozen food over fresh food, or how are they trying to save money? That'll be really interesting to see.
The other interesting aspect of the Woolies result will be the the wages problem they had, which has cost the company about $500 million. It'll be interesting to get an update on that.
Yeah, hopefully they can put some of that behind them. We've seen Phil Lowe up in front of Parliament this week, Tony, and next week we've got another bunch of regulators and market operators. We've got ASIC, ASX and APRA in front of Parliament. Another grilling for ASX and Helen Lofthouse, you'd think?
I would think so, yes. I think there'll be probably some tough questions to Helen. And ASIC chairman Joe Longo has been in the news quite a lot in the Financial Review over certain things happened to his office, which he apologised for, a sort of the way he spoke to someone there. But John Lonsdale, the new chairman of APRA, is up as well, I think. So that's interesting. I don't think we've heard him being grilled by Parliament since he took over.
No, doesn't he arrive at a fabulously interesting time too?
Yeah, that's right. Look, he's got a lot of good things to talk about. I think the Basel III higher capital ratios came into force on January 1, so he can talk about how Australia's banking system is probably never been stronger than it is at the moment. But his view on housing defaults and insolvencies, arrears might be very interesting.
Yeah, I mean, we'll want to know if he's going to provide the banks with the leeway to help nurse customers through. I think that's the big question there. And finally, Tony, on Wednesday, we've got a really interesting bit of data, and that's the wage price index. This is really important for the inflation outlook. It was mentioned by Philip Lowe on Friday morning as a key bit of data he's watching. What we don't want to see, Tony, is the price-wage spiral that we're starting to fear.
Yeah, that's right, because he did mention that as a potential issue that could embed inflation in the system. But I don't think, apart from, Australia Post paid their employees a 6% pay rise, but I think most pay rises are coming in around 3 to 3.5%, which is I think relatively modest considering how far behind wages growth got over the past decade.
Yeah, no, good point. All right, Tony, we love getting questions here at Chanticleer, the Chanticleer podcast, so send them in to chanticleer@afr.com. And Alex from Princess Hill asked us an interesting question. Last week we talked about hawks and doves in monetary policy. What other animals are prevalent in financial markets? Tony, have you got a couple you want to run us through?
Yeah, look, I've got a wonderful little book called The Dictionary of Finance and Investment Terms, published by Barron's. I keep it next to my desktop. There's, I'll just give you a few. The alligator spread. It's the spread in the options market that eats the investor because basically the commissions are so high. There's the bear hug.
Yes.
That's the takeover bid so attractive in terms of price and other features. You just have to accept it.
Yep.
The dogs of the Dow, I think this is not a bad one. That's a strategy of buying the 10 highest yielding stocks in the Dow Jones Index. And what usually happens is that they outperform all of the top 30 stocks in the Dow, which is because you're buying them at depressed prices and earning the highest yields. Maybe one other one is, and it's been in the paper a lot, thanks to our colleague Chris Joy, zombies. I mean, these are not animals or humans, but they're companies that operate even though they are insolvent or bankrupt.
Yeah, lovely. All right, a couple from me.
What about you?
Hawks, they see the need for interest rates to rise and monetary policy and fiscal policy to be tighter in order to control inflation. You've got the doves, so they see the need for lower rates and looser policies. I guess the biggest two animals in the market are bulls and bears. So the bulls see something, that might be a market or an individual stock price, going up, where bears see the opposite. They see things coming down. Often you hear talk about dogs, they're crappy stocks. Lame ducks, they're chief executives who announce their departure but stick around for a while longer, but they can't really make any important decisions. Whales are big investors. Sharks are investors who are good at seizing an opportunity. And one I love is the dead cat, as in the dead cat bounce, when something inherently bad or something that has gone wrong enjoys a short jump in its price before its ultimate demise. Tony, what about the chook? That's an animal of the financial markets.
Yes, well, look, I think there's a bit of danger going there, James. We don't want to crow too much about our Chook super fund, just as it's been hammered by Bitcoin miners falling. But yeah, no, I think, the rooster does have a role somewhere in financial markets, even if it's just our column.
That's
and
right.
People can try and get some insights into what's happening.
A bit of crowing never goes astray. Well, thank you, Tony. It's been a big week for us, and another big week looms with lots more discussions with CEOs. So get ready for next week. It's going to be big.
Yeah, thanks, James.
And thanks to you for listening out there. Well, if you like the podcast and you want to hear more, consider rating and reviewing us, as it helps others find us. And follow us on Spotify or Apple or wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thomson, and Tony Boyd. The producers are Lap Fan and Alex Gow. Our theme music is by Alex Gow. See you next week.
The Australian Financial Review.